Thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis with what might come from economic calendar. Sometimes I mix that with headline news or geopolitical items. But it can really get confusing out there when the market sentiment changes and you see good news now bad news and vice versa. And not be understanding if you're kind of watching on the sidelines as to what's going on. So we try to go into what's on investors' minds, what's impacting it, and why it's happening, what good news, now bad news, and vice versa, to give you the information that you might be seeking. So if you're on the sidelines, you might be kind of looking at falling rates just because maybe you're looking to refinance or maybe you're looking to buy. So hopefully these videos will provide you the information you're looking for. A little bit about myself is I am a loan officer. I do work with a national lender, so we lend in all 50 states. If we can help you guys out with your refinance or purchase needs, I would greatly appreciate the opportunity to earn your business, so please reach out to us. But more than that, we like to be here for you guys as a resource. So if you guys have any questions about anything, please reach out. We're here to try to help you guys out. So without further ado, we'll start off with the economic calendar. We just got one item here today, and most of this week will be on housing data that will be out there. We do have one item that will be impactful as well. That'll be a Thursday. The ECB will be going through their meetings and then announce their rate hike. So there is some debate as to how much it is. It'll be the first time in about 11 years since they've actually hiked any rates, and they've been I believe they've been negative territory for a while now. So this could bring them back into positive territory. So without further ado, let's kind of jump right over here today. We got the NAHB Housing Market Index. What this is, it's an index that measures the confidence level for home builders, and this will kind of give us an idea as to what home builders are finding in the current market state. So this is for the month of July. So June came in at 67. Forecast was supposed to be a slight dip to 65, and as you can see here, it dropped by quite a bit down to 55. This is probably one of the biggest drops I think I've seen in quite some time. And so right now they're basically stating that there is no confidence in the markets whatsoever for them. This can be important primarily because, if they don't have no confidence in the markets, they're not going to be building houses. And we all know that the inventory level has been quite so low, so we've been kind of depending on home builders to kind of build to kind of keep up with the amount of people and everything. So if they have no confidence, that means we'll be seeing a probably dramatic cut in our terms of our permits and building starts and stuff. So be prepared. Today markets are stock market's up today. They did like some earnings reports that came out recently. They got a little bit more optimistic Friday, and they continued on to today. Asia markets are closed today, so we don't really got any effect from them. But again, Thursday will be a big one because will probably impact us as well, and that is the ECB's rate hikes decision on there. Whether it might be, I think they're trying to debate if it's 50 or 75 basis points hike or not. So again, corporate earnings reports kind of drawing in the stock, so a lot of money is flowing from mortgage-backed securities over there. Right now we're down about 9 basis points, but we're well off the lows for the day, so we might see some price improvements. We're down, I think, even much as like 38 basis points. So depending on when investors came out, the lenders came out with the rate sheets, we may see it. So we touched off the 25-day moving average. Now we're moving upwards. Pricing was worse and currently is worse, but again, as we're seeing some pullback here, it's possible that lenders might come out later today or at some point today, see some improvement in the pricing. Now, depending on how much this continues, the improvement may be just that we end up at where we closed on Friday. Friday we end up closing up 38 basis points, but I think almost double from what we talked about in that morning. So we did have some price improvements. So today, unless we get to that level, pricing will be a little bit worse. But unless we somehow take off even further, we'll probably be around the level where we left off on Friday, as such. All right. So yields, same thing. It was down much lower. We closed down about 2.992 basically on Friday. Today we're up to 2.97. We're even up higher. We've kind of scaled back a little bit here in the 10-year Treasury. So we'll kind of wait and see if this continues its trend downwards or if this kind of stays within this range right now. So lastly, let's go touch on where the average rate is in the U.S. for conforming loan limits. Again, these are delayed by days. These are based off of Friday's results, and then they do have points built into them. So that's why you're not seeing them in increments of 1/8 bit. So 30 years now at 5.72%, and the 30 or 15 years at 4.97. So we did see some improvements on these based on Friday's data, and so that's the good news. So happy Monday for you folks. A little late for saying it, but just happy Monday. Thanks so much for watching. If you guys got questions, please reach out. We're here to help you guys out. Even if you guys want a rate quote, we're here to help. We can be more than happy to accommodate you guys. If you guys could do us a favor, we'd greatly appreciate if you guys like these videos. Go ahead and share and like these videos to help us grow our channel. We'd greatly appreciate that. You guys have, again, enjoy the rest of your day. Thanks so much for watching. See you guys in tomorrow's video. Bye-bye.